Two, one. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, Dan, wanting to begin our conversation, reminding people of some upcoming USDA reports.
Within the hour at 11 a.m. Central Time today, the USDA the NASS, National Ag Statistics Service, will release their acreage report and the quarterly stocks report. And when we circled dates on the calendar, uh, before we started planting crops, sitting back there in February, March, looking forward, it's this day that we thought was the potential would hold potential for a price volatility, for supply demand determination for the grain market. So it's important. It'll be important to see what these results are. And the main two commodities that we're looking for across the U.S. are corn and soybeans. In Kansas, and of course there'll be wheat numbers also, and hard red winter all pretty much done, but spring wheat, especially to the north, still in question with regard to what final acreages were. We'll be watching grain sorghum numbers also here in Kansas, both for the acreage and for the stocks reports. But anyway, the USDA came out in their prospective plantings report on March 31st of this year and estimated corn acres at 95 million 326,000 acres. The pre-report estimates are for about 95 million 350,000, so up about 25 million acres, not much. So in my thinking, what really matters on this report will be whether we get some number that falls near or outside of the range of pre-report estimates, and it would take that probably to move the market in one direction or the other. So the average trade estimate, of course, 95,350,000 for corn. The low end estimate on the very low side is 93,750,000. The high end is 96,800 acres. So you got a range of about 90, just under 94 to over 97, that if we get some surprise in corn acres, that could come about. Now, is that expected? No, but there are people that are measuring that surprise. Of course, all of this is up from last year when we had about 90,600,000 acres approximately. So when we look at the corn market being relatively lower and no threats at this time to the U.S. national corn yield, yes, in pockets, of course. So this higher corn acreage number by about 4.5 million acres it weighs on the market. If we came in and saw some planted acreage number that was towards the low end of that range, a surprise to people, that could have a supportive impact on the market. I frankly think if it's high, if we get something over the USDA's early projection, I don't know that you'll have a lot more bearishness. So it's really something on the low side. And for soybeans, in that I recall that March 31st report as it came out, we were surprised that soybean acres came in at was projected in the prospective plantings report at the end of March at 83,495,000. So yeah, that's what it was. Now this projection comes in at a little bit higher than that, 83,655,000. Frankly, if anything was going to change around, given some rainfall, et cetera, I would wonder about the soybean number shifting. On the low end, you've got a trade estimate of about 82,500,000. That again, so 83,655,000 as an average estimate. Some of the respective trading companies that give pre-report estimates come in and said that we could have something as low as 82,500,000. So that's something to watch. I am also I think we need to watch the sorghum number. the USDA came out in the that prospective plantings report at the end of March and projected 6.595 million acres of grain sorghum planted, and a lot of that in Kansas, Texas, and Oklahoma. Kansas primarily. So we'll be looking to see how that acreage came about. And for the wheat number for winter wheat, which is really what we're after, at projection of the USDA projected 33,315,000 in the earlier report, and now in pre-report estimates for this report are about 33,300,000. So really no appreciable change expected, which means we're at risk to a surprise. So I'd watch that. The other side of this, of the ledger for this report at 11, will be the trade estimates for U.S. quarterly grain stocks. Of course, it's we report on the estimates of what the stocks are, and what we're really looking after is what was the use the last quarter. So we'll be watching this pretty closely, that this report for any indication of higher or lower than expected usage, especially for corn. And for wheat could enter into that too, because what we're really trying to ferret out of all that is whether feed use was higher or not. We have a pretty good idea of ethanol usage, of exports, all this other stuff, all these other categories, but we don't have really any other way to measure feed usage other than these quarterly reports. We can make estimates of it, but we the feed number is a residual. We figure everything else and figure how much we got left. And then if that doesn't make sense, then we start going back in history and thinking, well, did we estimate the size of last year's crop right? So that report, that type of calculus or algebra really doesn't come into play until we get into the September report. So we're on our way there. That's the next report. So we got that. There's a potential for a market to move by the numbers for the corn number projected 4.64 billion bushels of corn. That would be down from just under 5 last year for June 1st. So watching that, and really for the issue with the wheat market, one of the reasons we're slowing down so much in terms of prices along with harvest is that, gosh, it just looks like stocks are going to be large. Of course, our colleague Romulo Lulato will be coming on, I understand, and he'll talk more about what's actually happening out in the field. So I'm hesitant to make a lot of statements about that at this time. So these are two major reports. They have the potential to move the market, and we'll see what happens.
Dan, what are we seeing for futures?
Well, low futures. I would say anybody that's seen the wheat market of late has seen the drop off. We've dropped from a high about 2 weeks ago up to 575. Closed yesterday, pardon me, at 518 and a quarter. Had gotten down to about to that or just a little bit lower yesterday. Let's see on the trade. Yeah, about 518 and 1/4 for the July contract. Remember, the July hard red winter wheat, soybean, and corn contracts are all just about to roll off. In fact, when you look at the volume of trade in those contracts, a lot of the volume is actually of trading volume is actually already shifted to the next contract, which would be September for corn, for August for beans, and September for wheat. So anyway, we're basically looking at harvest lows. When you look at where we could go lower for wheat, if the harvest comes in pretty strong, the lowest that July contract's ever been is $5. So we got that. Soybeans have dropped off also in the last week, and part of that's again no perceived threat to the soybean crop. It had closed yesterday at 10.22 3/4. We had been spending quite a bit of time around 10.50, so we're down 20-30 cents. And you got two lows out there as if the market perceives no threat going forward in the next 60 to 90 days, then we'll be looking at price levels like 980. The contract low for the July contract had gotten down to about 970, 968, something like that. So those are those are the type of metrics that we're looking for. And really what happens when we throw out numbers like that, when the market is kind of groping around to figure out, well, where do I go if I've got bearishness or bullishness at any one time? Well, you start paying attention to your recent history. Do I have enough momentum to go beyond onto high side or the low side of where I've been? And for corn, of course, corn has been really weak of late. In the last 3 or 4 days, it dropped precipitously. Had been around 430 to 440, and here just recent period of time with the Brazil news coming into play, and with second crop corn looking projected to be a record high, and other factors at play. 409 and a half was the close yesterday. And again, that's a drop from the 420 to 430 area of, well, pardon me, 430 to 440 that we'd been spending time at. So I guess I think the markets aren't pricing any risk into any of the futures. So if something changes in the near future, when it would actually show up, then you'd be re-energized to go back to the higher side. But at this time, we see no signals of a risk to the crop as we're sitting here almost at July 1. So it doesn't mean that's where we'll end up at from here or far lower, but until something actually shows up to risk the production side, then this is probably where we're going. That said, low prices will tend to spur on usage, and we're seeing really good corn usage in terms of exports. Uh, and ethanol holding up pretty good on the corn side. We'll see what the feed use number is coming out of that stocks report in a little bit. Grain sorghum just about 3 million bushels, which is for the week ending June 19th, about the best number we've seen in months, in months, literally. So the grain sorghum exports starting to respond to low prices, so that's good. Soybean usage slowing down a little bit. I think the burden on the market of South American crop coming in and all of that is weighing on the soybean side of things, and so we'll see where that goes as well.
Dan, I appreciate you taking the time to join us today.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but stick around because we have more for you up ahead.